How are you assessing the risk premium for EM given the Trump tariff threats?
It's incredibly challenging right now because what we're exposed to in terms of the new administration are the very flashy headlines, right? We get news of 60% tariff, 15% tariffs, an extra 10% tariffs, and they start to add up. And what we're not being exposed to is really two things. One, how that will work once the new administration is in place. I think they're being very clear that they intend to impose significant tariffs, or at least as much as they can, but also to use them as a bargaining chip for other goals within the administration. But I think more importantly, what the market may be missing is that while the U.S. is critically important, and while these tariffs will definitely be a headwind to emerging market growth, emerging market countries and companies really are able to shape their own future, right? And I think we see across the emerging market world a lot of signs domestically where we can find opportunities for pretty interesting investments, particularly given that the world is so negative on emerging market equities now.
Derrick, I do want to get your thoughts on China because, we had a guest on, Andrew Collier, in the previous hour who seemed to echo one view out there that perhaps China doesn't have dry powder up its sleeve. What do you think?
Oh, I think they do, and I think that they have been holding back, right? We didn't see a readout from the November Politburo meeting, which was very unusual, and that may have had to do with other issues beside the economy. But nevertheless, it suggests that they're keeping quiet and keeping their options open as they see what policies the new administration opens up. We do have the work conference coming up in December. And I actually don't expect much out of that either, because again, I think China is going to be biding its time. So I think we need to wait for the NPC meeting in March once the new administration is inaugurated in place. And I suspect we'll see a continuation of their stimulus, and I wouldn't be surprised if they look for ways to push more stimulus, maybe for the first time, toward consumption and more domestic-driven policy, just because their export engine is clearly going to slow coming into 2025.